to your buy. That would be BHP. So, of course, this is post-demerger of its petroleum assets, which has been picked up by Woodside. So, essentially diversifying, I guess, from the past to the future, as it's seen, into such materials as copper, nickel, potash, and the like.
Yeah, so a lot of analysts, myself including, liking that move, Andrew, away from oil. It gives the company a smaller carbon footprint. Don't get me wrong, I don't think it's going to end up on too many ESG filters just because they're getting rid of oil, but it certainly allows them to focus more on those commodities that you mentioned, copper, nickel, potash, and of course iron ore, as we all know. The other reason why I like this one is because it's fairly obvious. It's connected to the Chinese reopening. So earlier in the week, Shanghai officially coming out of lockdown. Very interestingly, a lot of the Chinese metals producers weren't able to take advantage or cash in on the what is typically peak demand season because of the construction industry over there in China. And now coming out, everything opening back up, they're likely to play catch up, and that'll mean much more demand for iron ore, of course, as the input. And interestingly, iron ore futures overnight hitting a 6-week high as those steel mills, like I say, replenishing inventories. So that's short-term stuff, but likely to provide a boost for BHP. And then long term, as we were talking about, I like that move away from oil and focus on their core competencies. So all good, all upside for BHP.